Today, we're going to talk about what stocks are on the verge of doing at a time when the Fed is getting ready for a big move. Nvidia is starting to show signs of life once again, being up 4.03% on this session. We take a look at the fear and greed index. We are sitting at 65, dead smack in the middle of greed. Now, when we look at how the indices fared across the board, the Dow was up 83 points. The NASDAQ was up 100 points. S&P 500 up 14.36. Russell 2000 up 0.35. Now, when we look at advancing issues versus declining, we had 61.6% of issues advancing on the day. Then we come over and look at the sectors across the board. Basic materials leading the way. However, the laggards out there were financials and utilities. Now, speaking of financials, we can see that XLF looks like it may have a double top. Now, that pattern would not be validated unless we break below the swing point right over here. And if we want to see how low XLF could potentially go, if we break the swing point right here, that gives us a price completion all the way down here at 40.90. Then we come over and look at the KRE, the regional banking ETF. And we can see over the past couple sessions, we've been on the move a little bit lower. Now, financials being weak, is that going to be a problem moving forward? Because as we looked at what happened last night, China's central bank unveils most aggressive stimulus since the pandemic. And what do you think happened last night? Well, if we come over and we look at the HSI, the Hang Seng Index had a very bullish day, but I want to show you guys, if we break this down to a 30-minute chart, notice where the HSI basically gapped up, went sideways, started to come down a little bit, but then right here on that 1030 candle, put a bottom in and started to go up higher. Well, if we look at the S&P 500, we can see overnight we're coming down. We put a low in right around 10 o'clock that same time period, rallied up, but for all intents and purposes, our market simply went sideways throughout the day. Now, when we come over and look at what we have in store on Friday, Fed's favorite PCE inflation gauge likely going to show cooling inflation and back further rate cuts. Now, speaking of rate cuts, if we come over here real quick, this is absolutely insane. The Fed, during the last FOMC, cut rates by 50 basis points. And now we can see, once again, the market is priced in greater odds of a 50% basis cut than they are a 25 basis cut. Now, the reason that is significant is because when the Fed goes on aggressive rate cutting campaigns, it always ends poorly for the stock market. And this goes all the way back to the 60s. Think about the great financial crisis. The Fed went on an aggressive rate cutting campaign right here. How much did stocks drop by? 58%. Well, what about during the dot-com? Dot-com, we see the Fed starts cutting rates. And think about that. And look at the chart down here. When the Fed starts cutting rates, the market does go up a little bit higher before ultimately dropping 51%. Then during the pandemic, the Fed was already starting to cut rates. We dropped by 35%. Let me know in the comment section down below, how much do you think the market is going to drop by once the market realizes we are in a recession and that the Fed is not cutting rates out of the goodness of their heart? Now, if we come over and look at the dollar index today, dollar index making a beeline straight to the downside. And look at this on the daily chart. We're really trying to challenge these lower levels. MACD indicator is below the zero line, but it looks like it's getting ready to cross lower. Now, who's one of the big winners out there when the dollar gets weaker? If you said gold, you'd be absolutely correct. Gold smashing through our price target at 2,670. So what's next for gold? Well, I would prefer to see some type of pullback, maybe down here towards 26.27, kind of the high of this wick candle on the daily chart, which also kind of correlates with the minus development area over here on the composite profile. Now, when we look at crude oil today was also spiking up a little bit. However, failing to close at the highs of the session. If we look at crude oil out here on the 30-minute chart, you can see we had a strong push up and then we started to falter a little bit as the day progressed. Now, going back over to Nvidia, I want you guys to see this out here on the 5-minute chart. Nvidia was rocketing up, and we're talking about this today during the live stream. Once Nvidia started to turn back up, that's exactly when the indices bottomed out here for today. Now, in case you guys didn't know, I do stream live each day the stock market is open. If you want to make sure you don't miss out, make sure you're subscribed and you have the bell notifications turned on for all. Now, if we come over and look at Microsoft as well, Microsoft today actually was down on the session, down $4.34. We take a look at Google. Google today was up a whopping 57 cents on the session. Then we come over and take a look at Apple. Apple up 90 cents. But with Apple, we're kind of having a hard time getting above this swing point right over here. Then we come over and take a look at Tesla. Tesla smashing through the ABC completion, filling the gap, closing with a doji candle as the market is rallying up. Now, does Tesla have more room to run? Can it make it all the way up to the 127 extension at 267.27, or will it start to falter here a bit? If you look at the MACD indicator right now, it's showing no signs of letting up. However, that doesn't mean it won't change in the future. We come over and look at the diamonds real quick. Today, the diamonds, and you can see we basically closed near the upper third of the range. We had a wick to the downside, but look at the MACD indicator. Still crossed to the bullish side, not showing any signs of weakening, at least on the daily chart. Out here on the 1 hour chart, though, the MACD indicator has been making it towards the zero line. And this is one of the things that we talk about when we do the market analysis for the first 30 minutes of the morning live stream. I keep saying, if we stay up these upper elevated levels, the MACD indicator gets towards the zero line, that could be nothing more than a recharge point to see another leg higher in this market. I don't know if you guys heard the good news, but this time has been one of the fastest payout cycles I've ever seen with Apex Trader Funding. And they're having right now 80% sale off all their valuation accounts, passing as little as 1 day, and only $85 activation fees across all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, as we come over and look at the small caps, also forming a hammer-ish candle, and we can see basically coming down, closing the gap right here from last week. Now the question is, will this be all that we get? And now we're going to go ahead and rally back up. The first time we came into this little structure area right up here, we basically rejected back down. If we come back into it again, we're likely going to push all the way to the other side, working our way towards that 230 price point. Then out here on the 1 hour chart, notice the MACD indicator line is right near the zero line. We've based out. We could get ready to rally on up. Are we getting ready for a major breakout in this market? And if that's going to be the case, what is going to be the catalyst? Because when we look at the economic calendar for tomorrow, what do we have on deck? We have home sales at 10 a.m., followed by crude oil inventory numbers at 10:30. However, later in the week, it does get dicey. We have a lot of FOMC members speaking on Thursday, including Jay Powell, and Janet Yellen will be speaking weekly unemployment claims, core durable good orders, final GDP numbers, just to name a few. Then on Friday, we had the Fed's preferred measure of inflation with the PCE price index coming out. Now we come over and look at the QQQs real quick. Notice we're right near getting ready to break out of this level. Now we do have gap right below us. However, right now, the market's like, who cares about that gap? We don't need to fill it right here, right now. Now, since we've already been able to break above the swing point up here, we do have a price completion and ABC pattern up here at 510.20. But wait, we must first go ahead and see if we can fill the gap right here at about 496.39. Now, when we look at the composite profile as well, notice we have a minus development area here. If you notice where the next volume spike is above us, it correlates very well with the gap being filled just above us. And the way that the market played out today is really setting up for that to unfold. Now, when we look out here on the 30-minute chart on the QQQs, notice MACD indicator basically flatlined. But if you notice, we basically have this upper level consolidation. Yes, we do have a gap way down here that needs to be filled, but you know what? If the market is staying above the volume profile levels, we're probably going to continue to go higher. Now, if you notice, yesterday was a D as in dog shape profile. Today, they spiked it lower. However, that ends up being nothing more than a trap, and they run the market higher. Then we basically have this upper level consolidation. And in my observation, it looks like we're getting ready to break out and make a run up towards higher prices. Now, if you are looking for some areas to potentially buying opportunities in this market, I like this minus development area right here on the QQQs, anywhere from about 484.62 down here towards 484.34. Now, as we jump over and look at the futures markets, notice we've had this push up, we've had this consolidation, and we're really having a hard time sticking below the weekly value area high. As long as we're above that, it says we are likely going to go higher. And the fact that we have this consolidation, we're probably going to spike up probably as early as tonight. Then out here on the daily profiles, you can see we came all the way down towards S1 pivot, and that was right around one of the areas we identified in this morning's analysis video. Now, when we look at the volume profile levels real quick, we can see that value area high is at 20,207.75. The point of control is going to be 20,151.75 with value area low coming in at 20,090.75. So how do I want to play this? Well, right off the rip, I'm going to be looking for the market to retest value area high and probably push even higher from there. Tonight on the live stream, we'll look and see, do we have that large liquidity order sitting above us, which we were watching all day during the live stream today? Or were they doing nothing then spoofing the market with that order? Now, as we come over and look at the SPY real quick, you can see we have that hammerish looking candle. And for all intents and purposes, every time they sell it down, the market just gets bought right back up. And with the lack of economic news coming out tomorrow, again, lack of catalyst, I really don't see anything derailing that. We already seen the news where China is trying to stimulate their economy. And we're probably going to see more of that around the world as we start to enter a slowdown. We look out here on the 1 hour chart and see the MACD indicator kind of basing out, but we are above the zero line. And out here on the 30-minute chart, we've already started to try to turn up a bit. Now I'd classify today's volume profile shape as a P as in Paul. And if we can get above the high from today, then we're likely going to make a run right back up here towards all-time highs at 572. Now back on the daily chart, I do want to remind you guys, we do have an ABC pattern completion at about 592.09. And when we look at the cash market real quick, we have an ABC completion right up here at 5939.05. Goldman Sachs is now projecting the S&P 500 will hit 6,000 by the year end. So that kind of correlates with the ABC pattern that we see panning out as well. And if we don't see weakness in the market in September or the beginning of October, watch out. The bulls are probably going to run amok going into the end of the year. We come over and look at the futures markets real quick. You can see we have that minus development area. We did not make it down there this morning. I was hoping we were going to make it as we broke through value area high. However, the market said, nah, we're going to go ahead and start going back up. We closed near the high of the session. Then if you look right here, you can see after hours, we're actually able to spike right above the high, and that is going right into the close. Now, since we're already up here at these elevated levels, are we going to come down towards the point of control at 57.86, or are we going to go ahead and try to push and get to higher prices? Now, if you notice right over here, we have all-time highs, which is not much higher than the current price. That's going to come in at 57.97.50. That's not a whole lot higher than where we're currently at right here at this moment. Now, when we look at the daily profiles, you can see value area high is going to be right up here about 57.92.00. Point of control will be 57.86.00. Value area low coming at 57.74.50. Now, if we break above value area high, then we start to come back down. Then I do want to focus on this point of control, as well as trying to focus on some of those gap areas that we talked about with the ETFs. Now, if you want to see the pros and cons of fast track trading, check out this video right here.